Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll discuss one question on profit reconciliation statement where actual amounts in both the books, financial books and cost book, are not given. Amounts of difference is only referred in the question. In that case, how to solve the question? Let us understand. We will read the question. From the following information, find out profit or loss as per cost records. That means here our end point of profit reconciliation statement will be profit or loss as per cost book. Profit as per financial record, we have 1,45,000. Over absorption of indirect wages, 12,000. Now this absorption term is related to cost book. They say that over absorption of indirect wages means here factory overheads. According to this information, in cost book we have taken indirect wages more by rupees 12,000. Overvaluation of opening stock of finished goods in cost account, 5,000. Excess depreciation, excess charged in financial account. Under absorption of selling overheads in cost book, 7,500. This is the information we have. Now we will be doing working notes to fix signs plus and minus which we require in preparation of profit reconciliation statement. Over absorption of indirect wages, 12,000. Our profit reconciliation statement will start with profit as per financial book because it is given in the question. So first amount column we will have to take financial book and second column we will have to take cost book. Over absorption of indirect wages, amount is given rupees 12,000. So we don't know the figure of indirect wages actually paid in financial book as it is recorded in financial book, but statement says that over absorption of indirect wages by rupees 12,000. So we have to understand that in cost book it is taken more. So whatever will be the expense in financial book plus 12,000 is expense in cost book. So we can take here directly 12,000. Overvaluation of opening stock of finished goods in cost book, 5,000. Opening stock we record to the debit of income statement, to the debit of trading account, where we record all expenses. So effect of opening stock is like an expense. Overvaluation of finished goods opening stock in cost book. That means this is recorded as more expense by rupees 5,000. So we'll record here in cost book column 5,000, which is more than as in financial book. Excess depreciation charge in financial book, 3,500. The amount of depreciation charged in cost book is not given, but they say that whatever amount is charged in cost book, 3,500 more is charged in case of financial book. So we'll take here 3,500. Under absorption of selling overheads, 7,500. Selling overheads under absorb means taken less in cost book by amount 7,500. So we'll put this amount 7,500 in financial book. That means this expense is there in financial book, but it is not there in cost book. Now we have considered all the items. Let us fix the sign. What we are required to do is, from first amount column, we are required to deduct the amount in second column. Now indirect wages first column, we don't have any amount. So 0 minus 12,000. Here we will get minus 12,000. Overvaluation of finished goods in opening stock as per cost book. We don't have any amount in first column. Second column we have 5,000. So it will be minus 5,000. Depreciation 3,500 minus 0. So here it will be plus 3,500. Under absorption of selling overheads. In financial book we have 7,500. In cost book we don't have anything. So here it will be plus 7,500. We have fixed the signs required for profit reconciliation statement. Now we'll prepare profit reconciliation statement. We have to start with profit as per financial book, which is given 1,45,000. It will be recorded in second column. Now as per our working note, we have to take items which are plus. Depreciation plus 3,500. Under absorption of selling overheads in financial book, 7,500. Over absorption of indirect wages, rupees 12,000. Overvaluation of finished goods, opening stock. One lakh 45,000 is profit as per financial book. To this we are added this 11,000. It is 1,56,000. These two negative figures we have deducted 17,000. Finally we arrive at profit as per cost book 1,39,000. If this figure comes negative, then it should be considered as loss as per cost book. So we have solved a question where we are not having both the figures as per financial book and cost book. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.